What's up, everyone? My name is Alex Miller, and today I'm going to be talking to you about the so ambiguous credit. Now, I know a lot of people, way too many people that I teach or that I know personally, that whenever I talk about credit, they always hit me with a line like, "Oh, I don't have to worry about credit. I don't even have a credit card."
Oh, young grasshopper.
It is not that easy. So basically, in today's video, I'm going to be talking about what is credit, how credit works, and how to improve it. Alright, so obviously, to start off, what exactly is credit? To summarize it, credit is basically borrowed money. It's either borrowed money or it's a service that you are getting with the promise that you will pay for that service later on. So basically, when it comes to credit, you have four main types of credit. You have revolving credit, you have charge credit, you have service credit, and you have installment credit. Breaking those down further, revolving credit is like a credit card, basically meaning that you don't always have a set amount that you have to pay at the end of each period. It's constantly changing because you're constantly most likely using your credit card, so it's revolving. It revolves into the next payment cycle. Charge credit is a lot like revolving credit, but it's different in the sense of instead of the amount that you owe carries over to the next period, you are basically spending that money with the promise that at the end of whatever amount of time that you promised them, that amount of money will be paid. Service credit is anything like a phone bill or a internet bill that you are getting the service now with the promise that you will pay at a later date. And installment credit is like a car payment where you take out a loan or a line of credit for a certain amount and then you are paying that off over time. It has a set amount of money that you'll be paying. Okay, so I know you might be thinking to yourself, well, Alex, this doesn't really seem like something that I have to worry about right now. And maybe you're right. But that's only really the case if you're planning on living a very basic lifestyle, which most people don't plan on living that kind of lifestyle. So now I'm going to show you why exactly credit is important. Believe it or not, your credit comes into play in more parts of your life and you might think about. For instance, say you don't have a car and you want a car. You want a new car. Your credit and your credit score is going to come into that. Give you guys a little story. The first car I ever bought, which is still my current car, is a 2016 Nissan Versa. I bought it used, I didn't buy it brand new, but because I had so little on my credit history, I was paying that car at an 18% annual interest rate. That's not the greatest interest rate if you know anything about interest rates. Now fast forward 2 years later, a little more, a little less. I'm not that good with keeping track of time. And I refinanced for my car and I dropped it down to an entire 13%. It is now roughly a 5% interest rate. All because I was very smart with my money and with making sure my bills are paid so that it affected my credit score and I could afford, I was a better risk on paper to the bank that I was trying to refinance my loan through, so they gave me a much better interest rate. Your credit would also be important if you're trying to buy a house. The same principle. If you have a bad credit, you're not going to get as good of a percentage, or you might not get the loan at all. As you can see, we've been kind of following the trend of loans. If you're trying to get a loan of any kind with a good interest rate, you're going to want to have a good credit score. And here's one thing that not a lot of people think of, or even know for that matter. Possible employers will even look at your credit. Yes, it's true, that managerial job you might be trying to get, your employer could look at your credit to see what kind of risk you are, not only with your own money, but with that company's money. Because why would a company put you in charge of their money if you're possibly not even good enough with your own money? Something to think about. So now if everything has hit your mark, you might be thinking about, man, credit might possibly be important to me. If you're thinking that, you might also be thinking, man, but I don't have any credit. I don't even know where to start. But that's probably not the case. You probably do have credit. You might not even know about it though. So I'm going to give you a couple examples of some things that might have already been helping you to improve your credit situation, or might have already given you a line of credit despite you not knowing. First off, student loans. You get out of high school, you immediately go to college, which is something that a lot of people do nowadays. Student loans are something that requires you to open up a line of credit. That's what your debt is. Your student loan debt is credit debt, which works towards your credit score, either in a good way or a bad way, depending on how your payment history is. I mentioned earlier, car loans, that constantly works towards your credit as well. Personal loans through banks, in times of emergency. Basically any kind of loan will work towards your credit. Financing for furniture. I have a bed that at the time I didn't have money for, but me and my wife really needed a new bed, so I financed for that bed. That's also working towards my credit score. Services such as phone payments or even Wi-Fi payments can work towards your credit score. Not all phone bills, not all Wi-Fi bills work towards your credit, but some do. And if you're not the best at paying those bills, it could be adversely affecting your credit. And also court-ordered payments such as alimony and child support. If you are in that situation, those payments could also be affecting your credit, whether you know it or not. So hopefully I've opened your eyes as to what exactly credit is and how you can use it, and even how to improve it. But the biggest thing you need to take from this is to be smart with your money. Be smart with your credit. Don't get a credit card and then go out and be like, oh, I have an $8,000 limit on this credit card, and max out that credit card. Yes, you can pay it back, but already you're setting yourself up in a horrible position, adversely affecting your credit right from the get-go. Don't go out and buy a brand new car or a brand new truck just because you want to impress, all the guys in the Sonic drive-thru. Yes, I'm speaking to you, my fellow Missourians. But that's all that I got for you guys. I really hope that this video helped straighten things out over how exactly credit works, what credit is. I know not a lot of people around my age know that kind of information, so I really want to share it for you guys so that you can better, ready yourself for the future. And if you did enjoy the video, please don't forget to like and subscribe for my future content. I really appreciate you guys watching this video. You guys have a good one.